Hi everyone, so I'm up 27.09% on my account this year, and I want to talk about why crude oil crashes upwards, because a lot of people seem to think that a crash is always going to be downwards, but that's not the case with commodities and especially in crude oil. So currently, so far this year, I have 12 out of 12 wins and 9 out of 9 winning months. The S&P returns up almost 13% with pretty big drawdowns, and I've returned 27 without any drawdowns. And the CL short put that I sold, I closed for 50% profit within 18 days. So it was a pretty good trade. Now let's see why crude oil crashes upwards. Now this is the position I had. It was a strike 52. And what usually happens with crude oil is if there's any geopolitical instability or something unexpected happens that has to do with the supply of crude oil, price usually will shoot up quite crazy. So it can happen, like this. And obviously, this is in April when Trump came out with the tariffs. This is somewhat of a unique situation where it did crash downwards. But as a rule of thumb, you will always see upwards crashes of crude oil. We see some here, and then this is kind of the most recent one that I've caught when I entered the position right here. And this happens because really everyone wants cheap commodity prices. If crude oil is cheap, it's good for most of society for the most part. And if it's expensive, it makes basically everything else expensive, and it's not a good thing. So it's the same thing as the ES. If it's up, everyone is happy. If it crashes down, it's really bad because people are losing money, so on and so forth. So this is kind of the exact same thing, but inverse. So usually all commodities crash upwards. Everyone wants stable or low commodity prices, and if they go up, this is considered a crash. So this is why I would never probably sell calls on crude oil or most commodities, because of that idea that they can crash upwards. Now, the really nice thing is if they crash upwards, volatility will also increase. So, and if the price kind of goes down, volatility usually will decrease. So when I entered this position over here, volatility was somewhat okay. It was on the upper range of the 1 month range, which is pretty good for me. And I was expecting that there might be some turbulence in the coming few weeks for crude oil with Russia and Ukraine in the Middle East. There's just too many factors that can drive the price up. Obviously, I didn't know exactly what's gonna happen, but I knew there's a little likelihood the price will just completely start going down slowly and surely to my 52 strike. And obviously, if anything happened unexpected in the Middle East or with Russia, Ukraine, which can affect the supply of oil, price will shoot up. And this is what happened basically for these last 4 days, and price also went down a bit today. It was all the way up here. And if you look at the volatility, and it might not look that bad. Let's see here, because we can only really see in the past 2 days what happened within the day, but volatility just shot up within the last few days, and it just is coming down right now. If you look at the 1 month range, or actually let's look at the 3 months of volatility, was even higher than that. It went down, right? So this is a pretty big increase in volatility in just a few days. And because we sold puts, this is where we kind of gain protection against volatility increase and an upward crash. So it's a really important lesson that I've learned the hard way back in the day, but it's usually the case with most commodities. So, for example, copper will also crash upwards. If you can see over here, this is usually what happens. Now, if you have any questions, let me know. But I think this is it for this video. And as always, if you want to trade with me and follow all my trades live, or you just want to join my Discord, just message me or email me with my email address below in the description, and I will add you up. Thank you so much again, and I will catch you in the next one.